sometimes we'll see a stock take a big hit and insiders start buying in. And it's like, all right, well, they know what their company's worth. They know if it's an overreaction, but they didn't do that. And then so it sits down here on the bottom of the chart for 6 months. Suddenly 2, 3, 4 insiders start piling in. We bought it. And look, since September, the stock has doubled. I mean, it's October. It's been a month. Now we're up about 50-something% since where we saw it. But, this is a stock that went from $20 to $2 and has been sitting there on the bottom of the chart for 6 months. Nobody's watching this thing. And you'd be a fool to buy this stock unless you had some kind of indication that things were improving. And I think the insider activity and their buying is the best indicator I've ever found to let you know it might be time that things start turning around.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. We got Ross Givens back with us today. Ross, your service, I heard about it, had you on the show. I immediately signed up, and that was on my first trade was May 29th. Since that point, I am up 23%, down a little bit today. We're on October 21st. It's Monday. Doesn't look like it's a crash day, but the market's down a little bit, which to be expected. It's been up so strongly. But I told you pre-call, I've been at this a long time. I've interviewed a zillion market gurus. Yes, there are systems that'll work, kind of modified buy and hold, right?
Right.
The dogs of the Dow. I was a big fan of the dogs of the Dow, the AAII index. That was great for a while. But this seems to work consistently. I'm looking at my portfolio now. Stock, I've mentioned it on the show before, Dominion Energy, utility in Northern Virginia. It basically is an indirect play on AI because all these data centers, they could take 500 megawatts, which is like enough to power a small city. 3 months after you recommended that stock, there was an article that I caught that said that basically they're up to capacity. They can't, if you want to open a data center there, and understand, Northern Virginia is the epicenter of all the data operations.
Right. And they've got pretty much a monopoly on the power utility there, more or less. Yeah.
Yes. And it's up 15%. It's actually one of the slower performers, but it's paying a dividend. I'm up over 16% since May 29th. I mean, you're looking at less than 5 months.
Yeah, no, listen, I love hearing you're making some money. And by the way, to address the elephant in the room, I apologize. I've got my analyst here with me today. Her mother had to run out of town, and she woke up with a 102-degree fever. So we just moved him in the home office. And you see empty bookshelves behind me. So I'm playing dad and stock trader today. But yeah, Kerry, listen, I love hearing you're up, buddy. We've been doing this since 2017, and you're intelligent. You've been in the markets a long time. Nothing works every day, every week, every month, right? But we've never had a down year. That includes a 2022 bear market. I think we returned 30%. We've had years like 2020, we made 300-something%. That's just a stock portfolio, just 20% per. So it absolutely works. The limitations we talked about before the call, and I think the reason, because the question I get is, well, why aren't all the hedge funds doing this? Why the big guys doing this? Is because there's capacity limitations. A lot of these stocks we're recommending are small cap stocks. And for people who don't know, what we're doing is simply tracking insider trading activity to look for what I believe are opportunistic buying. So, for example, we had a little biotech company in the middle of stage 2 drug trials trading at like 40 cents a share. Ticker symbol was CATX, it's Perspective Therapeutics. And suddenly in December, we had like the CEO, the CFO, half the board of directors, VPs, the chief medical officer, all suddenly buying this stock up hand over fist for the first time in years. And so it's like, maybe they know something. And oftentimes they do. In that case, drug trials are going great. The stock up 300-something% the next few months. Amelix, which we bought right at 30 days ago, so 56%. Then we have some that just don't go anywhere. Sometimes they were all buying, and it was kind of coincidental. Sometimes, we'll have one to go down a little bit, but we tend to not have really big losses. And the reason is, well, one, we use stop losses. We don't risk more than about 15% on these on average. But, what are the odds if your company's doing that poorly, if earnings are bad, if sales are bad, if the market's not like what you say, why would the CEO and the CFO and the board and all these people be buying, with their own money? It's just very rare. And so by kind of fishing out of a stocked pond, you're opening yourself up to own the stocks that have the highest likelihood of delivering, as you said, some above earnings, above expectation earnings, or great drug trials, or, the fact that all their slots are filled up for energy production in the next 2 years. And so, we've been doing this for a while, and I think our portfolios have something like 1,900% compounded since 2017. But listen, I love hearing your experience, and I hope we open more people's eyes up to this, what I think is a big loophole for investors.
Hey, so talking about Amelix, that one I found fascinating because the stock I think they're making a treatment for Lou Gehrig's disease. It got rushed through. The studies weren't complete. Then a study comes out, the stock goes down 90%. And then all of a sudden the insiders start buying. And
you mean before we bought it? Yeah.
Yeah. Before we
bought that stock was a $20 stock in March. And overnight it went from $20 to like $4 when that happened. And it just stayed there. March, April, May, June, July, August. It's trading $2-3 a share. Sometimes we'll see a stock take a big hit and insiders start buying in. And it's like, all right, well, they know what their company's worth. They know if it's an overreaction, but they didn't do that. And then so it sits down here on the bottom of the chart for 6 months. Suddenly 2, 3, 4 insiders start piling in. We bought it. And look, since September, the stock has doubled. It's October. It's been a month. Now we're up about 50-something% since where we saw it. But, this is a stock that went from $20 to $2 and has been sitting there on the bottom of the chart for 6 months. Nobody's watching this thing. And you'd be a fool to buy this stock unless you had some kind of indication that things were improving. And I think the insider activity and their buying is the best indicator I've ever found to let you know it might be time that things start turning around.
And you sent out an alert after it's 25% or so went up, sell half, which I did, locked in that profit. So I'm not going to lose any money. My worst,
that's right.
If I can get out at what I paid, if it starts sinking again, if I get out for what I paid, I still made 12.5%.
Yeah.
Very short period of time. You do that enough times, all of a sudden, before you know it, your portfolio is really increasing. And I'm not talking my book here. I don't recommend stocks. I'm not a financial planner. I'm not allowed to. I'm just recounting the experience from one of your recommendations where it really proved true. And maybe later this week, it'll go even higher. There's something going on with that stock. We don't know what yet, but there's something.
Yeah, and that's the thing. All we do is share our research. It's up to our people or up to our members to decide what they want to do. But we send pretty in-depth research on these picks. We don't just give them a ticker. It's like, here's the company, here's what they do, here's what insiders are buying. And we look for the common things that led to the biggest moves. So if one insider's buying, that's good. 2, 3, 4, 8 of them, that's substantial. Do they buy every month, every quarter, or is this rare? If it's a guy who makes $10 million a year, putting 50 grand, la-di-da. If it's a guy who makes 500 grand, putting 2 million, well, now you have my attention. So we really just use a ton of common sense to try to find these opportunities. And, as you said, these are small stocks. They can be volatile. That's both good and bad. These are the kind of stocks that can go up 50% in a month. They can cut the other way. But again, it's rare we see that in the midst of insider buying. And so generally what we see, I've been doing this since 2017, so I think I speak pretty well on it. On average, it's usually out of every 5 stocks, maybe 1 or 2 hit a small, we're out even or 10% down. A couple, we make our 20-25%. And usually we'll have one, what I consider, a home run trade every 4 or 5. That's a 50, 100. We've had some go up 1,900%. And so you sprinkle a couple of those on even an average portfolio, and you've got a heck of a return. So the 25% is a rule we put in a while back. It's like, look, it's great being up 30, 40% in a month, but it really bites when it goes back down. So look, let's take the base hit. Let's take half of it. Let's de-risk the trade. That way we can leave our stop at break even, give it room to work. And I'd rather have half of it on 1,000% ride than none of it. So it's like, look, put some dollars in your pocket, give it some room to, let's see if they're on something huge, or it's going to be, a single or a double. I mean, we had stocks like LifeMD, LFMD, we bought, I think in 2023. Well, it turns out they're like an online pharmacy for the weight loss drugs, for the Ozempic and the Wegovy. And no one had any idea how big those were when the insiders started buying. But, they're on the inside, right? They're getting sales reports every week, and they're like, our sales are doubling and tripling each quarter. Like, wait till they see this earnings report. So, we get in early, and we went up 200-300% in the 12 months we owned it. So, again, they're not all going to do that, but, you can risk 15%, get some big moves like this, and even 1 out of 10 that does a double, a triple, a quadruple. You really got to do a lot of things wrong not to make money.
Yeah, one thing you mentioned in the describing what you do is that these insiders got to hold for 6 months. So that means this isn't just going to be a minor jump. They believe that it has some staying power.
Well, that's right. Yeah, what you're referring to is these short swing rules. So one of the things the SEC did, and it's back in the 10b5-1 rule, is say, look, all right, guys, we're going to let you trade. They basically said, we know you're going to buy on some inside information. You're too clever. We're not going to get around it. But you're not going to pump and dump. You're not going to buy on Tuesday, report a big number Wednesday, sell Thursday. Said if you buy, you're holding for 6 months. If you sell a day before that, we're taking the profits. So what that does, is you properly pointed out, is it gets you those stocks that likely have staying power, the ones that are like to go up and stay up. That's why our average holding time is probably 3 to 4 months on these. A couple we've held for a couple of years, but yeah, it's not day trading.
So it's
sure.
Actually, you have a better chance of making money than the insiders, because that thing could go up and then go down.
Yeah,
and we get out closer to the top than the insiders can.
Yeah, it's happened many times. Sure.
So that's like a cool thing. So
there's kind of two reasons they buy. I'm sorry, I didn't mean to cut you off, Jerry. I'm just going to say there's two main scenarios we see. One is a big drop, stock got too cheap, insiders are buying. So the one we talked about is a great example of that. Those can be difficult because you got to try to read between the lines. Go, all right, these guys, are they just adding shares on? They're going to hold for 20 years. Like, is that because our time frame's different than theirs? The other situation is, look, this stock is near 52-week highs. It's already up 50% this month. Why are they buying now? And that's usually because the stock is doing, or the company's doing much better than the market realizes. And so it's generally either a turnaround or trying to get a bottom or a pre-breakout where news is yet to come out. But both pay the same way. Both money spends the same, Kerry.
And then you got these perfect inside traders who always make money on every stock they're an insider in. And those are just like, they're just give-me's.
Yeah, and look, it's not guaranteed, but we do focus very heavily on their track record. I like to see first time. I love to see someone who's been at that company 5 years, never bought, now they're suddenly buying 2 or 3 times. That's good. If they bought before, I need to see a track record of success. Most of these people are MBA level, top, C-level, C-suite, smart people. But it doesn't mean they're great stock traders. If I go back and, this guy been a big buy. Well, last time he did, the stock went down 50%. Or this, we're not going to take it. But if you're picking a portfolio manager, right, it's not a guarantee. But if you're going to pick, somebody with a 20-year track record of market-beating returns, or you got 20-year losing returns, where are you going to do better with? So we do focus on the insiders, you're right, that have perfect track records that have, look, every time we bought, it was near the low or right before a big move. And so if they have a history of beating the market, it's just going to improve your odds. It's just a bunch of little things we're stacking up. And at the end of the day, you really put the odds in your favor.
Well, one thing I haven't tried yet is doing the options on them, because I figured, let me see the stocks first, how that goes. The options, when I see your sell half, they've often gone up 100, 150%.
Oh,
is there any advice you can give newbie options traders to not get caught in the whipsaw of the action, the volatility in these options?
Well, the first thing I tell people when it comes to the options we recommend is don't use a stop loss. I mean, you really can't use a stop loss, especially on these smaller stocks. They're a little bit spready, maybe $1 by $1.50. It's not like an Apple call. And so it's like, look, if you were going to put 10 grand in the stock and risk 10%, so it's $1,000, well, buy $1,000 with a call option. Don't put 10 grand in the call option. I'm going to use a 25% stop. You're going to get tagged out. Just the spreads are wide and it's going to tag you. So I tend to bring it way down, but our average option, we look 3 to 6 months out, usually that 30-40 delta range. And if that stock goes up 20% the first month or two, that option almost always is at least a double. So usually we double those, sell half, you've got all your money back. Whatever you sell, the rest of them on's a freebie. And so, if I'm targeting options that are 4, 5, 6 months out, and you got all your money back in month 2, well, now you've got all the upside essentially for free. And then once it gets in the money, you don't have that time decay risk. So we try to sell them, they're 30 days out or less. But the biggest advice for options, I know it's not sexy to say, is just, you can't use a stop loss on most of these. Just put the money in you're willing to risk. Just know it's going to go to 0 or down 80%, or you're going to double, triple your money.
Yeah, I'm gonna dabble in it a little bit. I think, just getting the brokers, some of them are so annoying about approving your account for options tradings nowadays because if they've been sued so many times, they just don't want to take the risk anymore.
All the Robin Hood kids are ruining it for the rest of us.
Yeah. So when you're like, it's tempting though when you see an option and it goes up 100%. To not just bail on the position and take the 100% profit, though, isn't it?
Yeah, and look, there's nothing wrong with that. We got people that do that. I mean, there's really there's no perfect answer to that. I mean, there's no way to say here's how you buy the low and sell the high and everything in between. All we can do is. Does a doctor? Okay, you got to.
All right, we'll wrap up because your daughter there is getting.
Sorry about that, Kerry.
Hey, that's okay. Just tell us again where we find you. I'll have a link in the show notes.
Yeah, the link below. We do a training session usually once a month or so. So it should have a link to that. I think the last one is up on demand. You can actually watch it, but. Go to tradersagency.com or click that link below. It'll take you right to our training, and I walk you through it. Like an hour-long presentation. We show you what we look for, what to look out for, how the strategy works. And, I think people's eyes generally get open really quickly.
All right. Well, I love it. Keep doing it. And, it seems like also just one final point. There's no shortage of these companies. They're constantly popping up on your screen.
Yeah, look, there's 7,000 publicly traded companies. I mean, we're not recommending Google and Amazon and Microsoft. There's no edge there. You got 5 million people competing with that, but it's Amelix Pharmaceuticals or Cantaloupe or Atmos Filtration, Lamb Weston. These are off the radar stocks, and these are ones where there's a much bigger opportunity out there for the average investor.
All right. Hey, well, appreciate you coming back on. I'm glad I was good to share my success with you, and thank you personally. And if you got a question for Ross, myself, shoot me an email, kl@kerrylutz.com. The link to a free webinar from Ross is in the show notes to this interview on financialsurvivalnetwork.com. Ross, hopefully I'll talk to you in a few months and the gains will be even bigger.
Can't wait. Thanks, Kerry. Good to see you.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.